If you're following our Global Economic Outlook series, hit subscribe to stay updated with new country releases. Qatar's economy just posted 6.1% GDP growth in 2024. But here's what investors need to know about 2025. From oil powerhouse to innovation hub, this transformation is reshaping global energy markets and creating unprecedented investment opportunities. Let's break down the fundamentals driving this productivity surge. Qatar's macroeconomic indicators tell a compelling story. Unemployment sits at just 0.1%. Interest rates remain stable at 5.1%, creating an environment ripe for strategic investment. Inflation is controlled at 0.8% annually, while debt-to-GDP ratio stands at a healthy 40.8%. These numbers represent more than statistics. They signal a fundamental shift in economic structure, from resource dependency to diversified productivity. The transformation is visible across every sector. Technology companies are establishing regional headquarters. Financial markets reflect growing investor confidence. Tourism revenue has rebounded beyond pre-pandemic levels. But the real story lies in the data. GDP growth accelerated from 1.2% in late 2023 to 6.1% by fourth quarter 2024. This represents a 400% improvement in growth velocity, driven primarily by non-oil sector contributions. The diversification strategy is delivering measurable results. Construction, finance, and tourism sectors show double-digit expansion. Infrastructure investment reached record levels in 2024. Banking sector capitalization exceeds regional averages. International arrivals increased 35% year over year. These metrics indicate sustainable economic momentum. Near full employment creates optimal resource utilization. Labor market efficiency drives productivity gains. Monetary policy remains accommodative for business investment. Access to capital facilitates expansion across industries. Low inflation preserves purchasing power and business margins. Price stability enables long-term strategic planning. Consumer spending patterns remain robust and predictable. Fiscal prudence maintains debt sustainability. Public finances support continued infrastructure development. The Sovereign Wealth Fund provides additional fiscal flexibility. Energy export revenues fund diversification initiatives. Trade surplus strengthens external balance sheet. Foreign currency reserves exceed 12 months of imports. Exchange rate stability supports business confidence. These fundamentals create a compelling investment thesis. Foreign direct investment increased 40% in 2024. Manufacturing capacity expansion attracts global partnerships. Output per worker continues rising across all sectors. Research and development spending reached 2% of GDP. Innovation investment positions Qatar for future growth. Non-hydrocarbon sectors now contribute 60% of GDP. Technology parks house over 200 international companies. 5G network coverage reaches 98% nationally. Digital transformation accelerates across government and business. Smart city initiatives demonstrate technological leadership. Higher education enrollment increased 25% annually. Workforce development programs align with industry needs. Vocational training graduation rates exceed employment demand. Human capital investment ensures sustainable productivity growth. The economic transformation is comprehensive and measurable. 2025 growth projections moderate to 2.4%. This represents sustainable expansion rather than speculative growth. Risk-adjusted returns favor long-term investment strategies. Portfolio managers are increasing Qatar allocation percentages. The economic model demonstrates resilience and adaptability. Economic shock absorption capacity exceeds regional benchmarks. Strategic reserves provide buffer against external volatility. Market volatility impact remains minimal on core indicators. Real-time economic monitoring enables rapid policy adjustment. Policy responsiveness maintains economic stability. Fiscal and monetary policy coordination achieves target outcomes. Institutional frameworks support consistent economic management. Governance indicators rank among global top quartile. Regulatory environment balances growth with stability. These structural advantages create sustainable competitive positioning. Regional comparison shows Qatar's superior productivity metrics. Business hub status attracts multinational headquarters. Regional headquarters increased 30% in 2 years. Corporate presence indicates long-term confidence in economic trajectory. Investment-grade credit ratings reflect financial stability. Sovereign debt maintains AAA equivalent status. Government bond yields remain competitive internationally. Yield curve positioning indicates investor confidence. Institutional investors increase Qatar exposure consistently. The data supports a bullish long-term investment thesis. Multiple economic indicators align for sustained growth. International recognition validates economic transformation success. Global competitiveness rankings improve annually. Economic leadership extends beyond regional boundaries. Now let's examine specific case studies driving this transformation. The North Field expansion represents the world's largest LNG project. Production capacity will increase from 77 to 126 million tons annually by 2027. This 64% capacity increase positions Qatar as the dominant global LNG supplier. Export revenues from LNG expansion fund diversification across non-energy sectors. 30% of additional LNG revenues target technology and innovation investments. Tourism infrastructure development creates sustainable revenue streams beyond hydrocarbons. Tourism contribution to GDP increased from 2 to 4.5% since 2022. Hotel occupancy rates exceed 85% annually with premium pricing maintained. Cultural and entertainment investments attract high-spending international visitors. Average visitor spending reached $4,000 per trip in 2024. Hamad Port expansion increases container capacity to 7.5 million TEU annually. Port efficiency rankings place Qatar among the top 10 globally for container handling speed. Automated systems reduce cargo processing time by 40% compared to regional averages. Integrated logistics zones connect port facilities with manufacturing and distribution centers. Supply chain efficiency improvements reduce business operating costs by 15%. Qatar Financial Center attracts international banks and investment firms. Banking sector assets grew 22% in 2024 to exceed $400 billion. Islamic finance products capture growing regional and international demand. Fintech incubators support financial innovation and digital payment systems. Digital payment adoption increased 60% among businesses and consumers. Qatar Science and Technology Park houses over 150 technology companies. Technology sector employment increased 45% annually for 3 consecutive years. Software development and artificial intelligence companies establish regional operations. Smart city infrastructure deployment creates technology export opportunities. Technology services exports reached $2 billion in 2024. Economic patterns reveal systematic transformation from resource dependency to knowledge-based productivity. The diversification timeline shows accelerating progress with measurable milestones achieved ahead of schedule. Productivity gains correlate directly with infrastructure investment and human capital development. Education-city partnerships with international universities create knowledge transfer and innovation ecosystems. Patent applications increased 120%, while research publications doubled. Research and development spending targets emerging technologies including renewable energy and biotechnology. Renewable energy capacity will reach 18% of total generation by 2030. Solar energy projects demonstrate commitment to sustainable economic development. Carbon intensity per GDP unit decreased 30% since 2020. Investment implications extend beyond traditional energy sector exposure. Optimal portfolio allocation includes infrastructure, technology, and financial services exposure. Qatar Investment Authority manages over $450 billion in global assets. Global investment strategy creates reciprocal foreign direct investment flows. Private equity and venture capital funds target high-growth sectors within Qatar's economy. Venture capital investment increased 300% in technology and healthcare sectors. Risk assessment identifies manageable challenges including energy price volatility and regional competition. Risk mitigation strategies include revenue diversification and strategic reserve management. Strategic petroleum and financial reserves provide buffer against external economic shocks. Economic stress testing demonstrates resilience under various adverse scenarios. Monetary policy flexibility enables rapid response to changing economic conditions. Qatar's economic transformation from oil power to innovation hub creates compelling investment opportunities. 6.1% GDP growth, 0.1% unemployment, and controlled inflation demonstrate economic strength. Diversification across LNG expansion, tourism, infrastructure, and technology sectors reduces investment risk. Risk-adjusted return projections favor Qatar exposure in emerging market portfolios. The economic foundation supports sustainable growth beyond traditional energy sector dependence. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.